All right, guys, things are looking pretty positive today here for silver and gold. Yesterday and the day before were a little bit slow, and that's something that I mentioned that I expected to see over the weekend. But as you can see here, we're back above the $25 an ounce level for silver, 1% on the day, up above the 1816 level for gold, 0.77% on the day. We're back in the green, and things are looking good for precious metals. As we scroll down here, you can see that reflected in the Fibonacci levels for gold and the Fibonacci levels for silver here. Now, if we scroll down, our friend Bitcoin is having some hard times, and a lot of guys in the crypto space are kind of a little bit concerned here. I mean, a lot of people aren't concerned. Many of them are saying, hey, hold the line, everything's fine. Of course, Michael Saylor is doing his whole Michael Saylor thing. But we're below the $60,000 level for Bitcoin. So pretty interesting to see. We'll see how that plays out. Now, this episode is going to be about CPI because I want to make some very important updates for you guys. I pressed the wrong buttons on something, and I need to actually update you guys on something. But first, if you're new to this channel, please hit that subscribe button down below. It helps to bring more people into the fold. And I want you guys to, stay abreast of all the changes that we'll see in gold and silver, because this episode is actually going to be pretty important, for your consideration of what we may expect in gold and silver prices. And please hit that like button. It helps to get this video out there to more and more people. Now, I'm going to actually start here, because this is essentially my CPI forecasting model. This is something I created on Friday, and you may notice that there's a change here. And this is essentially my expectation for CPI for the month of November. And remember, we had the October numbers come out, and it was above 6%. I put out a video on Friday, or it might have been on Saturday, basically saying I ran these numbers, and I got a number of around 7.5 for the lower limit. Now, that was pretty high. I was surprised to see that myself, but there's a reason why it was so high. It was because I literally copied and pasted the wrong numbers into the wrong cell. And when I reviewed it this morning, I said, oh man, I made a boneheaded error there. I put in the wrong number. So let me show you exactly what I'm talking about here. This is pretty much how the sausage is made. And this is the November reading. Now, as you can see here, there's a 6.10%. We should pretty much be around the 260s, the mid 260s. It can be a little bit above, it can be a little bit below. But this number right here, which is an input, should be in the 260s. And just to show you that, let me highlight that there. As you can see, this is the number. That number is a component of these. And this number here is a component of this, as you can see. So, as you can see, no BS. I'm not just like plugging in numbers, but I put the wrong number into this one. So I accidentally put in the number of 347, and 347 gives you around, oh, I'm sorry, I put in 247 just now. 347, and 347 gives you around 7.54, which obviously is pretty high. And for some reason, I never saw that there's a huge difference between, as you can see, we're in the mid 200s here, mid to low 200s, then we go up. And then we made a huge jump to 347. I didn't see that. So I apologize for that. I do expect this number to be around the mid 260s. And that would give us around 6.10 for November. We actually have all of the numbers set for the December reading. Now, the December reading should actually be around 7.22 on the low end. So that'll be interesting to note moving ahead. Again, these are the numbers that we should expect. This right here as well. It may be in the high 200s, 260s, or low 260s. So I just kind of averaged it around 265. But we get this number pretty much by the end of the month, and we should be around around the high or low 7.2 or 7% level in December. Now, that aside, I want to show you something very interesting because this is going to be important to consider moving ahead. Let's pretend that all of the inputs that make up my model don't change moving ahead into the future. Let's just say things just kind of stay stagnant, which shouldn't. We should expect things to move up in price, so on and so forth. But some of these numbers here actually in CPI will edge a little bit down. But let's see what happens when we move into 2022 here. You may be surprised to see that even if nothing changes here, these start going down. Now you may say, wait, how is that happening? Well, A, these don't change, but also take note that we have to deal with base effects. What are base effects? Well, when you're looking at CPI, it's a comparison of inflation today versus inflation of last year. So inflation in 2022 around March, April, and May will have to compete with the inflation of 2021 of March, April, and May. You see where I'm going here? The base effects increase, the denominator increases pretty aggressively. So we are going to have to compete with this kind of denominator moving ahead with CPI. That's why you're seeing, March, April, May, June, you're seeing things drop here. Yes, the input prices or the inputs here don't change. So that's, a flaw in looking at this, but you start to see how much the base effects really do impact the CPI that we may see moving ahead into the future. So I want you to take note of this, take of it what you will, but as you can see here, the highest components or the highest rates of CPI, again, all things being equal, will likely happen or likely persist because we have lower base effects that we're dealing with right now. Check this out. We were at 1.0. We were at 1.3, 1.4, 1.2, 1.1, 1.4 in December. But next year, again, we're going to have to deal with 4.2. We're going to have to deal with 5.0, 5.4, 5.4. So, and even by October, we're going to have to deal with 6.2. That's what's going to likely slow down some of that rate of change. So just keep that in mind. All of you silver stackers, gold stackers, that this is something we have to deal with as far as the rate of change. So this is what headline inflation is going to compete with. So all that to say, for that November reading of 6.10 that I showed you, this is the hard number that will be kicked out. So I had to add that to my model for gold. It pretty much doesn't change it too much, my prediction intervals. As you can see here, still high, mid to high 1960s, mid 1800s, low 1700s on the lower limit. I expect gold by, again, December 1st to be between the 1800s and 1960s, which is pretty much where it is right now. Silver, again, didn't change too much, but I just want to show you where that is. So again, given a so just to say gold is at 1900. Given that, we should expect silver to be between 24.56 and 27.69. So somewhere in between these two numbers. So guys, again, I just want to give you this update here. Again, things are looking really good for gold and silver right now, but just be mindful. Again, just think, even seasonally right now, I mentioned that some of the good months seasonally for gold and silver are January and February. And then things start to moderate even seasonally. So a lot of things are pretty much just kind of lining up here for Okay, things are going to be looking pretty good going into the end of the year, but be vigilant. Be extremely vigilant. I know some of you guys have a lot of money in gold and silver and are maybe looking to trade or, do shorter term things. If this is something that you are doing, please do your own due diligence and please be vigilant. Okay, that's enough for today. Hit that subscribe button down below. Hit the like button. Thanks again for watching. Have a good one.